Stanislas Jourdaud. He's a coordinator of the International Movement for Monetary Reform within the non-for-profit organization Positive Money. He was also a coordinator of a European Citizens Initiative for the universal basic income. I give you.
Thanks. So yeah, I thought it was better for me to follow up directly because actually my presentation quite overlaps with the one from Jose, but it's a good thing, I guess, because it will. I have so many things to say. I think this way Jose already kind of helped in creating the general understanding of the topic. So as it was just mentioned, I used to be very much focusing on basic income, and a few years ago, 2 years ago, what? A few years ago, I moved on to the money side of the issue, and I just wanted to show you this tweet, which kind of represents my life and everything I'm going to talk about. So it says, when the only argument against basic income is the money, then the problem is the money system. So that's sort of the starting point of this presentation. And okay, so to be honest, I'm going to talk about almost the exact same thing as Jose just did, but perhaps in a more familiar way for you, at least hopefully. So let's start with actually, okay, we need the money to finance basic income, but what is money and where does the money come from? Who creates the money, right? So perhaps, I don't know, there's some people know in the room. Well, this is what people think. This is a survey in 20 countries, and basically 30% of the population have no idea who creates money, even though they use it every day, I suppose. About 30% as well think that central banks create money. Okay. 22% think that governments create the money. Okay. And 20% think that private banks create the money. So what is the right answer, you think? Any takers for central banks? Who thinks central bank create money? Who think government create money? Who think commercial bank create money? Okay, the three responses are right. It depends what kind of money we talk about. Does it work? Yeah. Okay, so if we talk about electronic money, this is the money on your computer, on your bank account. So this is created most of the time by banks. If we talk about coins and notes, this is sort of created by the central bank, but in fact governments take the benefit of it, the seigniorage. If we talk about credit card, this is also created by commercial banks, and I'm going to explain a bit later. But if we talk about, and then what Jose talked about, quantitative easing or central bank money, this is created by central banks. So that's why the three responses were right. Only I don't know is not a good response. But okay, yes. So yeah, central banks also create money, but only in exceptional times or very in limited amount. And the money they create does not really go into our hands, as Jose was explaining. It only remains within the financial system. Okay, so this we know. So the correct answer, though, I mean, even though we have these three different government create money with coins and notes, and commercial bank create money, and so on, but the truth is, the real answer that really matters is that 95% of the money in circulation is created by commercial banks. Perhaps you think I'm foolish. This is not me who is saying this. The Central Bank of England has explained this a few years ago in a very important academic paper, and they explained that commercial banks create money in the form of bank deposits by making new loans. So we could talk a lot about that. I'm not going to explain much, but we have to understand that money is injected in the economy when someone goes to a bank and says, I'm going to build this project, I'm going to buy this house, and I need a credit. And at this point, the bank, the private bank, create money, give it to you, and then you have to pay back. And when you pay back the loan, the bank effectively destroys the money. Okay? Okay, so it's not, again, it's not just me who's saying this. The Bank of England, the Bundesbank, and even the ECB very recently have also explained this. And although this is something that very little people know. Remember, in the previous slide, only 22% of the people think that private banks create money. So a minority of the people know how this works. And actually, I forgot to mention this, but only 13% of the population think that this should be the case. Only 13% of the people agree that this should function the way it is. So this is already something that's very questioning, right? But let's move on. So this is the evolution of the quantity of money in the euro area. This is so-called the monetary mass. And this is since 97, until now, until June 2017. So this means actually since we created the euro, we've created a lot of money. Banks, private banks have created a lot of money. What's going on here? Why is it stagnating? This is after the crisis. So what happened is that we've created too much money, we had a financial crisis, then everything is stagnating, so we don't have much more money to consume because private banks don't make credit. They don't lend money to people or businesses because there are too many uncertainties in the economy, right? And now, since 2015, now the monetary supply is growing again. And this is not so much because of the credit. This is because of what was explained before, so-called quantitative easing. So this is the central bank intervention. But again, this money doesn't really go into our hands. We will see that later. So just a question here. So there's this money growth here, so more money is put in the circulation, but who is getting it? Who benefits from this money? I mean, I haven't seen such an increase in my income, or not for this reason. You know, who has seen such an increase in its wage? Who think? I mean, basically, we have doubled the money, more than doubled the monetary mass. Who thinks that this salary has doubled since the last decade? Perhaps not so many people. So who is getting the money? This is based on UK figures, United Kingdom, so it's probably not entirely accurate for all countries, but the trend is definitely accurate everywhere. Most of the money supply goes to property, mortgages, real estate investment. 30% goes to financial sector, and 8% for consumer loan. Again, this is UK, it's probably much less in other countries. And only 8% goes to real economy or businesses lendings. So this gives you already an idea of what is the problem with this system, that we give basically the banking sector is in charge of creating the money and allocating this money into the economy, but they do most of it goes to real estate. And the key point here is that the problem with real estate or houses is that most of the time we create money so that someone can buy a house that already exists. So we inject more money into assets that are, pre-existing assets. So that's why house prices actually rise, because we are putting more money into a market there are not enough more houses and real estate. So that's why the prices rises. This is UK. But again, the trend is probably similar, in all countries. So this is what Mr. Ed Turner says. He's the former head of the Financial Security Authority in the UK. So he was in charge of dealing with the crisis. And he says the financial crisis of 2007 and 2008 occurred because we failed to constrain the private financial systems, creation of private credit and money. So he's saying we allowed the banks to create too much credit in the wrong areas, basically. So now let's move on. So we live in exceptional times because, as it was said before, since 3 years ago, since the crisis, central banks have tried to intervene because commercial banks were not creating enough money so that the economy could grow. So the central banks decided to basically step in and push the banks to do more lending. And they do this by creating central bank money, and this is called quantitative easing. So up to now, the ECB, the European Central Bank, they started this program 3 years ago, and they have created almost 2 trillion euros of money. It's like the GDP of Spain, for example. And so how does it work? Just very quickly, central bank create money, but again, central bank money. They purchase, they buy sovereign bonds or debt. Basically, they buy financial assets, mostly government debt, but also corporate debt. And what it does is that if you are a banker or an investor, and you are usually investing all your money into sovereign bonds, sovereign debt, right? Well, because the central bank is buying all those debt, it's harder for you to buy this debt, and therefore the interest rate goes down on those on the public debt. So basically, one good thing with this program is that it's cheaper now for governments to borrow money because the central bank is buying it, and therefore it decreases all the interest rates, all the returns on any investments you can make. It makes them go down. And this is supposed to encourage people to borrow more, because it's basically the best time ever to invest, because money is so cheap. And therefore, allegedly, people are supposed to borrow more, businesses should borrow more as well, and then we have more consumption, and then you have growth, economic growth. But this does not really work, because basically there's already so much debt that not so many people want to borrow more debt. It's not the right, they just cannot afford. Even though the rates, the interest rates are very low, it's not the right moment. There's also a reason why that businesses in particular, they might want to invest, but there are so many political uncertainty. They don't see a rise of consumers, they don't see more consumers coming to their shops to buy stuff. So even though they could afford to, they don't see why they should do it now. So there's a sort of feedback spiral, a negative spiral that is making the economy stagnate. This graph is mainly showing that, okay, we've got a slight increase of credit demand, but it's mostly going to household for house purchase. So again, this is credit for buying pre-existing assets. It's not credit for producing new stuff. And basically it's still stagnating, and we have not recovered the level of credit that we had before the crisis. Okay, why is the ECB, what is the role of the European Central Bank? Their role is to maintain price stability, so they want to have inflation at 2%. And that's why they want to encourage people to borrow, so that there is more consumption, so that there is more inflation, and they have 2% inflation. Since the start of QE, here, this is inflation. It is completely stagnating, and you might say, and the target is here, right? It's 2%, and they have done nothing. Inflation is still at 1%. What is going on here? Actually, what you see, okay, they got closer to 2%, but this is only due to energy. At the end of last year, the OPEC, the oil energy organization, decided that they will decrease the production so that the price of oil and energy would go up. So this has nothing to do with the European Central Bank's policy. This is an external factor that is having an impact on inflation. So basically my point is quantitative easing does not work. Even on its own term, even for the only objective of ECB, no result. Even worse, this is a study by the ECB that shows that by injecting so much money into the financial markets, the ECB is pushing up the price of the assets. So it's basically making the richest people richer. So this is the highest 20% of the population, and their portfolio basically on average goes up by 30%. For the poorest people, only 5% increase in their assets, in their wealth. So just to sum up, quantitative easing doesn't reach the real economy. It fails because for the strategy of the ECB to work, we need more debt, which is a bit absurd when you remember that we are supposed to be in this mess because we had too much debt, and now the only solution is to have more debt. It's exacerbating inequality between people and countries because this policy has a very different effect in countries. For example, in Greece, no effect at all of this policy. And it might be also fueling asset bubbles and it might create more problem in terms of financial stability. But I'm not going to detail this. So here comes the big question. What if the ECB, the European Central Bank, distributed the money to all of us? So this is the proposal that Jose just already mentioned. So this is what we call quantitative easing for people, as opposed to banks, or helicopter money, which is sort of nickname of this idea. So I'm done. Basically, Jose already told you all of this, so I'm going to go quickly. If we distributed those 2 trillion euros money to everyone, that would make 7,000 euros for every one of us, or 250 per month. But of course, because giving money to people directly would be so much more effective than injecting into financial markets, actually, we would only need a fraction of this to stimulate the economy. So in my work, we talk about 100 euros per citizen as a start. And we think this would be as effective as the current policy, even more. Of course, it would be more equally, the effect, the benefits of this policy would be more equal in the population, but also between countries. The idea is that the ECB could make direct payments to your bank account, and it's legal. We can talk more about that. This is the figures that Jose was talking about. There's also a survey that showed that 54% of the people think it's a good idea. Even the central bank, the European Central Bank, have been discussing this a bit in public. This is the chief economist of the European Central Bank, and it was a year ago about where he admitted that this was technically an option. But how does it relate to basic income? So here's a brief comparison between the two policies. And I think this clarification is very important for the discussion later. So basic income, it's a lifelong, you get it from birth to death and so on. It's periodic. Helicopter money, or QE for people, it's a lump sum payment. It's only 1,000 euros, for example. And there's no commitment that it will be every month, or every quarter, or every year. There's no commitment by the central bank, because the amount and the objectives of this policy is price stability. So the idea is that the European Central Bank would only activate this concept, this tool, when inflation is too low, basically, or when aggregate demand is too low. So the amount would depend on how much is needed, how much stimulus we need in the economy, while basic income, the amount depends on, do we want it to be above the current minimum income, or a bit lower than the average minimum wage? I mean, the consideration that we take into account are completely different. The target group as well could be different. So obviously basic income, universal, or resident. When we talk about helicopter money, usually we talk about adults, not because we don't want to give money to children, but children don't usually have a bank account. So there's just some kind of technical practicalities here. And some proponents of the idea think that it should be means-tested because it would be more effective to ensure price stability, to stimulate demand. But that's just debatable. I'm just presenting, what is the debate about. So the objectives, as I said, if we talk about basic income, there are so many different objectives. You name it, environment, inequality and so on. When we talk about helicopter money, the only objective for the central bank is price stability, inflation, and so the relevant legislation and the relevant institution are completely different. So my point is, basically, basic income is a social policy, perhaps other domains as well, but mainly a social policy. Helicopter money is monetary policy. It's a very different context we talk about. Okay, so just perhaps to sum up, this is, I think, the way we could approach this idea. The opportunity for us is that helicopter money, even though it's not exactly basic income, it can be enacted much more quickly because the conditions for doing it are here. The ECB understands it. They know that they have to do something. Monetary policy is broken. As Joseph said before, it's in crisis. There's an intellectual crisis in monetary policy, and all proposals can feed into this debate. But there are more pragmatic issues, so this requires no so-called transfer union or fiscal union. All the issues we talked about before, we can bypass those issues. We don't need neither to reform the welfare state, and this does not require treaty change. But of course, politically speaking, this might not be the most viable way to fund the euro dividend on the long term. For many reasons, central banks have many objections. There are lots of resistance towards using money printing. We still do need some sort of fiscal union on the long run. So politically, it would be inviable to say we should do this permanently and just keeping doing it. No, we also need taxes at the European level. We need tax harmonization and so on. So let's not replace this idea by another. But so my main point is basically that we could use this as a transition. We could use helicopter money as a way to start the basic income, a sort of euro dividend. And of course, the European Central Bank would only do it if they say that we are going to do it for a certain period of time, and that gives us a period, that gives us a time frame where we can build pressure to have a fiscal union, to say, well, actually this system by DCB is quite a clever idea. Why not making it permanent through taxation? That could be the sort of dynamic that we could create. I was also asked to talk about cryptocurrencies, but I'm not sure. But you can talk to me later if you want to discuss that topic as well. I'm quite a fan of it. Thank you.
Thank you very much for your interesting but long presentation. Now you have opportunity to ask a question or two to our speakers. My colleagues asked me to motivate you to maybe not just putting questions to our speakers, but also to have debate to each other. Now we will start with questions and debate, and then after the lunch break, Barb Jacobson will have her presentation. Thank you. Any questions? Yes.
Okay, thank you for excellent presentations, and they were really informative. And I have a couple of comments and a question. I guess you, Stanislav, you made a very strong case for helicopter money. So my first question is, what are the most important arguments against this idea, because it hasn't been implemented? I mean, just on the base of your presentation, everybody would agree that we should actually implement it. And my understanding is that in the US they had this kind of a one-time money injection, but I'm not quite sure if it was given in a form of a voucher, because if you would use vouchers, that would guarantee that more of the money would probably be put into Then a couple of comments on this idea of European financing the European level universal basic income. Perhaps my first question is, why do you want to introduce that on absolute terms? Since if you think about the money in absolute terms, let's say 100 euros buys way more things in Greece than in let's say in Sweden or Finland. And if we want to tie this discussion around European basic income into minimum social standards, they would be most probably expressed in relative terms, like 50% of median income. So why use absolute amount of universal basic income instead of a relative one? With regard to your calculations on indirect taxes, if I understood you correctly, that would mean that all the countries would lose 50% of their indirect tax revenues, and that would certainly have an effect on education, healthcare. Those countries, well, I mean, I think this is a really important factor. When it comes to refugees, I think it's a really out-of-the-box idea, and it's good to throw out of-the-box ideas, but perhaps my first argument against this is that if we really want to give 2,200 euros a month for 3 million refugees, the first thing is that we're certainly going to get more than 3 million refugees very soon. And the other thing is that most of the money would be sent back to their home countries.
Okay, let me start with refugees. Of course, everybody would like that they simply drown, so we would not see them and we would not see their suffering. Of course, there would be another solution, and this is a kind of economic program for Africa, but we actually destroyed all the states which were actually keeping people there, and to some extent we are responsible. We are also member of NATO. We went to Iraq, we went to Afghanistan, nothing to do there. To some extent I do feel responsible for the misery we created in these countries, Europe as such, I would say. So this is one thing. Whether more people would come, I agree very much with you. But I just make a calculation saying that this is not an economic problem for Europe, because this amounts to 0.14% of GDP of European Union. So there are many other problems, social, political, and so on, but not an economic problem. This is as far as refugee is concerned. And I just got the idea, okay, if we are looking for the solution and if we are creating each month 80 billion euros, which is not going anywhere, which is that staying within financial system, creating new crises in the future. So this to some extent would be the solution. As far as why I went to figures, I simply went to the budgets of the countries, to the numbers on GDP, on population, how many taxes are paid, and so on. Therefore, I went to absolute figures. This is the reason. Of course, you know, I showed at the end that the figure of 130 is 0.44% of GDP of Germany, but I accept completely the idea that this is politically not feasible solution. I accept that. I only claim that economically everything can be solved. In a way, as far as present conditions within Europe, together with quantitative easing and helicopter money as concerned, this is to some extent due to the fact that inflation disappeared from the economic mechanism. As long as we had inflation, many of the problems related with debt would be solved, were automatically solved, because the burden was spread. Now we don't spread the burden, and we do have the problem. And everybody believes that inflation is a real problem. Inflation is not a real problem as long as it's up to 10%. It's just acceptable redistribution of income. Of course, if you come to 3,000% and so on, this is a different story. But we still believe that inflation is a monetary phenomena. It's not a monetary phenomena in recent world. I remember I was a member of the Central Bank of Slovenia in '91, and we were not caring at all about inflation. Only thing we wanted to do was to keep our currency as weak as possible. So this was the reason to have competition, and inflation disappeared because of increased competition and so on. So it's not just a monetary phenomenon. This is simplification. And if you are talking about helicopter money, the idea goes back to American economist Milton Friedman. He actually brought the idea. And if you go also to universal basic income, also he proposed a form of universal basic income. So it's not that this is the idea which would be considered or which would be supported by the left side of the society. It's, on both sides you would get ideas who would support such idea. I'm just looking for technical solutions, and therefore I was talking about the numbers. Okay.
Okay.
So just to complement the question about the objection, so the inflation one is obviously one that comes again, oh, you're going to create too much inflation, but actually it's quite ironical because right now 10 years ago people would say, oh, this is crazy, you will necessarily overshoot inflation and create hyperinflation. And nowadays the critics against helicopter money are saying this is a bad idea because it will not even work to stimulate inflation because most people will not spend enough of the money. So this is quite ironical that the narrative has completely changed for contradictory reasons. But there are two other recurring objections against this. One is this, that actually what you are proposing is a basic income, and it's not, the central banks are not supposed to do this. Central banks are not supposed to make transfers to individuals and to decide, who should earn and who should lose from a particular policy. Of course, we are saying, but this is equal. You give it to everyone. So you do a policy that everyone will like, and that is not, you are not deciding on losers. You are only deciding to make everyone winners. And actually, because the only purpose of this policy is to achieve your mandate of the central bank, the 2% inflation, then why not? And you are an independent central bank, you have a large freedom of deciding what you should do. So we think it's legal. And the treaty, technically speaking, the treaty does not forbid these sort of ideas. But there's still a sort of debate among economists in the sense that this resembles to some sort of fiscal policy, therefore it's not the job of the central bank. So there's a controversy around that. And then there's some sort of accounting issues. But again, this comes from the very orthodox school of economists to say what you're proposing, what they are asking me is, what is the asset in front of this money creation? This is really their concern. With quantitative easing, they purchase sovereign bonds. So there's they have a balance sheet, and in their balance sheet they have an asset corresponding to new money in circulation, and they are okay with this. But in our proposal, there's no asset. We just create money and give it to people. The asset would be we can figure out an asset. We can tell them, well, it's general welfare. People feel better with more money, and that's an asset for society, I suppose. But I suppose the ECB's accountants don't really like this argument, sadly. And then comes the question of the vouchers. Yeah, technically possible, perhaps politically more realistic as well. Yeah, that's definitely an option. Obviously, it depends from which perspective you position yourself. If you position yourself from a central bank, perhaps a good idea. If you position yourself as basic income supporter, it kind of kills the idea of setting a precedent towards basic income, so it can have some drawbacks. But if it's one way to make it happen, I'm all for it.
Yeah, thank you for your presentation. About refugees, thank you to bring the subject. I just want to let you know that there is an initiative from the organization Algosphere, which is working with other basic income organization in order to write an open letter to the United Nations to start to find a way to give a basic income for refugees. Unfortunately, I don't have enough time to monitor this initiative, so if some people can, I'd be happy. And I'm happy that you made a presentation about the macroeconomic effect of basic income, because we were auditioned at the Council of Europe, Barb and I, in January, and it's true that we lack of documentation about global effects. And it's, I know that in this report, that they are preparing a report about basic income, and they point that the variety of welfare tax benefit system is a nightmare to implement a basic income, so it's interesting. And I have just a question. When you say 6% of people would work less, how do you know that? How will you said that... it's a survey. Okay, thank you. Okay.
This is the number of people who say they would work less if they get, what was it, 300 a month. Yeah.
Connected to the United States and Manitoba experiment, where the survey at the end found out that even that was more, it was not a basic income, but it was a how is it was called, poverty reduction programs, and they were meant only for the last centile of the population, and the whole decrease in work habits were between 7 and 9% as well. And that was meant, again, only for the last decile of the population. So those who are either not well educated and always, to some extent, have problems with finding work, and even in that population, only for between 7 to 9%, the working periods decreased over the length of the project or the experiment.
Universal basic income as something between communism, where everybody gets what he needs and gives what he can, and social democracy. In normal social democracy, we do have many universal things: education, health, social care. So, but the problem is to get another step, and this is very questionable, because people would not accept that. If I said now to all pensioners who get 1,000 euros per month, 500 is universal basic income and 500 is what you earn, there would be no change. Nevertheless, I believe that 80% would say, no, this is what I earned, and this is not a kind of, universal basic income. Don't talk stupidities. As far as central banks are concerned, these are the most conservative people in the world. They do believe that the mechanism works. It doesn't. You can show by figures that the mechanism broke down.
Two small questions, or no, I don't know if small. One is, you talked about the redistributive effects of European basic income between countries. I think it would be very interesting also to look into redistributive effects within the countries. So how would, for example, German citizens be affected? Because I think if we have the discussion always just the redistribution between the countries, that's kind of counterproductive in terms of the European solidarity debate, because it actually creates more an envy and nationalist debates. But I think if we also can show that this has, like Ulrich a little bit showed on with the ecotext, so that it has also beneficial redistributive effects within countries, then I think we have a much stronger argument. And the other point is more to Stan's presentation, and it concerns inflation. So I'm also kind of convinced that for helicopter money this is not really an issue, but I think it would become an issue if you try to do basic income on run basic income on money creation. Then I think inflation will become a serious issue.
Okay, perhaps I'll take the second question immediately. Huh? Okay, so inflation. So first, we have to understand that inflation is not just more money in the economy equals more inflation. Inflation depends on whether there is more production as well. Basically, if we inject more money in the economy, but we also have more production of goods and services, then it balances out, right? So the whole question is, if we do this, helicopter money, would that, would there be a shortage of goods and services? Right now, the situation is that we have so-called an output gap. That means we have spare capacity in the economy. We could produce much more, but it's too bad there's not enough money for people to consume. So to answer your question, on the medium term, I'm quite confident that this would not create too much inflation. Perhaps it would not even create so much inflation at all. So the ECB could definitely do this for a few months before inflation goes to 2%. Whether we could do this permanently, it's of course a different question. In theory, no. This would create hyperinflation. People might lose confidence, might not lose trust in the central bank because they think they are foolish by creating so much money. Now, perhaps I would be more nuanced. There are some kind of prospective arguments that could say, well, actually, perhaps that's the future. We should do this permanently because, as Jose said before, the lack of inflation now is because of competition, global competition. It's also because of technology. Think of the internet and what a mobile phone can do. A mobile phone is much cheaper than all the services that you can do. That you have a phone, you have a radio, you have a podcast, internet. The price of a smartphone, would equalize perhaps 2,000 euros 10 years ago for all the services you can get, if you see what I mean. So there's what we call technological deflation. So anyway, my point is, it might be the case that in the coming decades, we have indeed killed inflation. Inflation will never return because we basically are in the 21st centuries and we are able to produce so much more in a such productive way that we are basically able to consume more if we had more money. And this would not limit our capacity to produce, sorry. But I'm not myself entirely convinced, but I think those are arguments that should be really thought about, including by central bankers, because there's really an area of uncertainty on this aspect.
Distribution within countries concerned, of course, is the same. Also, in Germany, you would have similar problems. The Bayern would be probably against because it would pay to some less developed part of Germany. So this is something which is more or less normal. But in the long run, I do believe that the society society is stable if people are relatively equal. So this is to some extent experience in Yugoslavia. Yugoslavia was an unstable country because GDP per capita in Slovenia was 7 times higher than GDP per capita in Kosovo. And then European Union would like to use the same rules for poor and rich, but the rich would not contribute anything to the rules. So in the long run, I don't believe that this is a society which can survive. Nevertheless, I am an optimist, and I am an optimist because of two people who appeared last year. One is Bernie Sanders and the other is Pope Franciscus. Both proclaimed socialists, or they behave as socialists, and I do know United States a little bit. For many years ago, talking about socialism in the United States was rather strange. And Bernie Sanders was probably a sign that the situation in the world will change. I do believe that this would happen, but I don't know. I will not live so long, but nevertheless.
Yes, thank you. I actually do have a question, not a comment. I would like to clear up a dilemma. This quantitative easing is meant to force the economical growth. So, but you see, in basic income movement, we are for degrowth. So actually, it's like contra our basic idea, this ecological and so forth. We are for degrowth. And with this quantitative easing, it's only like this. It's a bad idea, but let's use it to good cause. Is it right or not? That's my question. Thank you.
Okay. Personally, I am for big growth because I don't need growth anymore. I like skiing and so on, and I am quite happy. But talk that to majority of the people. People do need growth, or they think that they need growth. You can be philosopher when you are rich enough, but you cannot be philosopher when you have to get. If you have problems to buy food.
Yeah, this is just my view would be. It's an excellent question. My view would be yes, of course, ethically, my values are all for degrowth as well, but economically, I don't know how to make degrowth work. Because we start from a point where we have, more than 1% of debt. So unless we have growth, we cannot repay this. So of course we can say we are going to forgive all the debts. I'm all for it. But in any case, my point is, if you want to do degrowth, you must think about this, because you cannot make degrowth sustainable in a world where money is created with debt. And therefore, even though you might disagree with helicopter money as such, because on the short run it's just promoting consumption and it's bad, okay. But still, you do need, from a degrowth perspective, we do need to recapture money creation and the role of central banks. And what we do with this proposal is helpful in that sense.
Just a point of order. It's 1:30. Yes. I don't know who else is hungry, but I certainly am. All right.
10 minutes more.
10 minutes more? Yeah.
Just a small comment on the risk distribution. So just a small comment on the risk distribution issue on a national level, which Daniel pointed out. I think it's not that simple. There is this recent OECD study where they show that actually in many countries basic income by their definition would increase poverty, since if we would have this flat rate universal basic income as a flat rate benefit, that would decrease dramatically earnings related benefits. But if we stick with the earnings related benefits, there is the financing problem. So it's not that simple that basic income would actually decrease inequality. It all depends on how it's implemented.
Okay.
my comment was not generally on basic income, but on this model that Professor Menzinger proposed. So how that model exactly with these numbers would impact. And I'm also not...
Yeah, but if you look at the OECD study, that gives you a kind of clue how it would impact, because they are actually applying that kind of measure for basic income.
Do you have a response to...
Yes, to him.
Okay.
I really like this comment that introducing of basic income is not necessary to decrease inequality. But what I would like to say is that like my intention of introducing basic income is not actually decreasing inequality. I just want people to have easier life to sustain and to live. Inequality, it's like secondary problem for me. The same is with poverty. Poverty is not my goal. I mean, in a way. It's just, what? Reducing poverty, yes, but reduction poverty not, and then we have to talk about relative poverty and absolute poverty. But what I'm saying is basic income is basics. So, no matter about inequality. Thank you.
The next is Ulrich.
A short comment to Valeria. You expect this, I think. Basic income is not for the growth overall. Basic income, however, it will be financed with quantitative easing or with eco-taxes or with other kind of taxes, gives us the freedom to decide whether we want growth or not. Give the individual the freedom to decide this. And yes, the result is not clear when we look in the future now. It can be that in some the people decided in the way for the growth, but it can also be that in some the decisions of the people lead to a certain growth in certain branches. In an open society, we cannot know this now. But important is that the individual must have more freedom to decide.
Just the response and then the Mrs. in the back.
I just wanted to say, and also to Dr. Menzinger, we are talking about us, our country, European Union, and developed countries. So I'm talking about degrowth in this sense. I'm talking about developed countries, like you said. The investors don't know how to use it credit because we already have everything. So, thank you.
Okay, the last question.
I have a big question now because I am optimist and I came here and I didn't think of that I would give this statement now here. Because I heard at the beginning what basic income would be. Then I've heard it would be a basic income, a very small one. And I don't think that's useful for giving the people the freedom to decide. And we have heard we can't change the system of taxes. We can't change so that there is degrowth. We can't change freedom, that there is more freedom because in EU there are more and more weapons. We can't say there will be a fiscal union. So, and an ecological and then social union. And so my question is, why don't we build another union? A union which is for the people and not only for for small elites and for big cooperations. We do want another union, so we should start. We are optimists or not?
Okay, we are hungry. Now it's time for a break, and we will continue later.